All right, I'm going to take a look at the stock market again. I think I'm going to give up on the idea that maybe we get a left translated fourth daily cycle that comes down and bottoms somewhere around the elections. It just, at this point, it just doesn't seem like it's likely to happen. Um, the S&P has recovered the 50-day moving average, as has the NASDAQ. Here you can see. And um, more importantly, I think, in my mind anyway, the semiconductors are leading again. Not only have they recovered the 50-day moving average, they're starting to get some separation from it, and they're not far from making new all-time highs. Um, of everything I'm looking at, this seems to be the most convincing piece of evidence in my mind anyway that we're not going to get any deeper of an ICL in stocks, and we've started the next the advancing phase of the next intermediate cycle. And I'm assuming that we're still, in a bubble. We never really exited the bubble um, hypothesis. In my opinion, you can have intermediate declines within a bubble. So just because the stock market dropped into an intermediate decline didn't take the bubble theory off the table. But let me go back to the S&P. But as you can see, this was just a very, very mild intermediate decline. Didn't even really turn the 50-day moving average back down, which is kind of one of the um, parameters I watch for to confirm an intermediate cycle low, and that just again confirms in my mind that we are now in a bubble phase in the stock market, and we've just had an intermediate cycle low, but a very, very mild one, and at this point, everything that I'm looking at is suggesting that this is probably not a fourth daily cycle that's going to left translate, come down and give us a deeper ICL. This seems more like this is a first daily cycle in the advancing phase of a new intermediate advance. That doesn't mean that this is going to be easy. We could still have some volatile whipsawing in here as we approach the elections, but my assumption anyway is that even if this does turn out to be some difficult trading between this bottom and this top, maybe some whipsawing back and forth to throw people uh, off of the bull side or get them prematurely short. Um, my expectation is that after the elections, we will certainly break out to new highs and continue up. So I think the overall trend, even though it may not be a strongly trending move yet, we're probably still in this band of volatility within the bubble. But the overall trend, I think, now is up, and these intermediate rallies, you can see how long this one lasted. It was 20 some weeks. Um, I would say there's a decent chance that this intermediate rally could last 20 some weeks as well. And assuming we are in this kind of a volatility zone, there's pretty good chance that this is occurring halfway through the bubble phase of this bull market. So we did almost 6,000 points from the March bottom to the to this top right here, and assuming we're just kind of in a band of volatility right in here, that's probably about halfway to the top of the bubble, then I would anticipate that the top would come somewhere around 17 or 18,000, and I guess that would probably come. I'm thinking we still have at least 6 more months to go, so sometime in late spring or early summer, maybe we get our top, and I would project it somewhere between 17, 18,000. Long shot maybe 20,000, but as of right now anyway, I've become pretty much convinced this is not going to left translate and give us a deeper intermediate cycle low. I think we're probably done with the intermediate decline, and now we're starting the advancing phase of a new intermediate cycle. And even though it may be choppy here through October, I think the trend between now and summer is going to be up, and probably by the time summer arrives, we're going to have some really big gains in the stock market. And I think you want to be in the tech sector, and I made a recommendation yesterday that my preference would be to be in the semiconductors. I think they're going to lead, and you can see already today they are leading. I think the biggest percentage moves will probably be in this sector. So, if I was just going to choose one specific sector to ride, it would be this, or there is, and I mentioned this months and months and months ago to my subscribers, that the liberals were going to really push the climate change dogma as an election talking point, and that I thought the solar and wind sectors would be really good a place to be as we move towards the election. And I made that recommendation way back here. You can see what this is, the solar ETF, and this is wind. Again, way back here, back quite a while ago. So those are performing as expected, and the Democratic side is as expected, really pushing the whole climate change dogma as a selling point on these elections. So if you wanted to be in energy, I think this is a better place. Those were anyway better places to be than in the regular energy sector, oil and natural gas and such.